This is Matthew Cratter from Bitcoin University, and today I wanted to talk about $1 Million Bitcoin in 2024. First, wanted to introduce you to Samson Mow, if you don't already know who he is. He used to be Chief Strategy Officer at Blockstream and has left a couple years ago to pursue his own ventures, which includes this company, Jan3.com, which deals with nation-state Bitcoin adoption. I'll link to all these Twitter accounts in the description notes below, but Jan3 is significant because they also just issued the Aqua Bitcoin wallet, which we're going to be talking about in a later video. All of which is to say that Samson has been and continues to be a serious voice and major contributor to the Bitcoin space. It's hard to overestimate what he's contributed through Blockstream and other ventures. So he's not just another online influencer. And this context is really important to remember when viewing his recent tweet, which we're going to be talking about. Now, the premise of this tweet is that markets will move in such a way so as to cause the maximum amount of pain for the maximum number of people. And this is always true in traditional markets, and it's even more true perhaps for Bitcoin, which is this apex predator, extremely volatile asset. So here's Samson's tweet that I wanted to talk about. Here's why we're going to $1 million Bitcoin in days to weeks. And again, this tweet is from January 8th, 2024. Here's why we're going to $1 million Bitcoin. It's max pain for the most people. Bitcoin has a way of doing what we least expect and in the most disruptive way. For example, at Jan3, we have many plans and meetings set for 2024. $1 million Bitcoin would derail everything. Ideally, we have a couple of good years to onboard nation states. Fast $1 million Bitcoin means we're out of time. 50 countries reach out frantically and we're overloaded. All of the careful planning and proposals are out of the door, just smash buying BTC and no sleep for the team. So this is how it would affect his company. Fast $1 million Bitcoin means that Plan B's stock to flow model, which we used to talk about many years ago and has been debunked, but this would mean that this model breaks again just when it was looking like it was going to track correctly. Max pain. Also, $1 million Bitcoin, this would mean that Lightning is completely unusable for anyone not using a custodial wallet or Aqua Bitcoin. Fast $1 million Bitcoin means fees are super high in dollar terms. No new Bitcoin users can afford to create a new Lightning wallet. Max pain. Number 4, fast $1 million Bitcoin means Michael Saylor and MicroStrategy never reach their goal of stacking 1% of the supply. So close, so very close. Max painish. Upside is MicroStrategy is now in the top 30 most valuable companies in the world list if Bitcoin were to go to $1 million per coin. Number 5, El Salvador and other countries miss the window to issue Bitcoin bonds and accumulate substantial stacks of Bitcoin at sub 100K. They're already doing this, but they wouldn't reach their full position. IMF debt still looms. Max pain. Number 6, Lagarde, Powell. These are the central bankers in Europe and in the U.S., Jerome Powell, and many highly regarded economists lose their jobs, but I think we're okay with this one. Hyper-Bitcoinization and fiat hyperinflation begins 1 to 2 years after $1 million Bitcoin. Max pain. Number 7, Peter Schiff and Goldbugs suffer a collective mental breakdown after Bitcoin goes to $1 million fast and gold is still hovering around $2,000. That's a pretty funny one. Max pain. Number 8, the plebs are not immune either. Many will be stuck with a number of unspendable UTXOs worth $500 to $1,000. This is something we talked about a couple days ago, so make sure you check out that playlist if you haven't seen it before. Many others, not you of course, will sell at 100K only to buy back at 500K, $500,000 Bitcoin. Max pain. Number 9, 8 billion people on this planet just missed the most important opportunity in their lifetimes to get into Bitcoin when it would have made a significant economic difference. Now they can only work to earn Bitcoin. I think this is the biggest one, max pain. This would be max pain for 8 billion people. Number 10, the entire legacy financial system will need to very quickly reorganize around Bitcoin as the new base. Businesses will need to be able to accept Lightning Network payments. Companies will have to rapidly convert cash reserves to Bitcoin, and none of them are remotely ready. Max pain. And Samson concludes, so my point is that the probability of Bitcoin making an unexpected move that results in max pain for the largest number of people is the most likely outcome. This means $1 million Bitcoin fast. Also, because of these reasons, ETF approvals aren't priced in. This was from about a month ago. Halving isn't priced in. More nation state adoption isn't priced in. If you're enjoying this video so far, I just ask you to hit that subscribe button, hit the like button, leave a comment, question, suggestion for a future topic, and also share this video with a friend or family member. There was a response from Stefan Benton here to Samson's tweet. I always admired your bullishness, but from where would this capital flow to Bitcoin? You think institutions will ditch USA long-term bonds, dump Apple and Tesla stocks, etc. There's not enough money to pump Bitcoin to 1 million right now. Samson's response, which I think is quite good and I want to break down, don't need much. There's the multiplier effect and the Veblen effect. So what does he mean by this? Thorstein Veblen was a famous economist in the early 20th century. I believe he was actually at Stanford. And he coined this idea of a Veblen good, a type of luxury good for which the demand increases as the price increases, in apparent contradiction of the law of demand, resulting in an upward sloping demand curve. So normally when prices go up, demand falls. If airplane tickets get very expensive, for example, people don't fly as often, maybe they'll drive to their destination. That would be a normal good. But Veblen goods have this weird demand curve where the more the price goes up, the more interested people become. And a lot of financial assets become attractive this way. For example, and this is how you get financial bubbles, etc. The Veblen good equivalent would be people who can afford it or more obsessed with a $20,000 purse than an equivalent quality $2,000 purse. And we may end up with something, obviously Bitcoins can be many things to many people, but to the ultra rich, it may become a Veblen good where you just got to say, I have some Bitcoin. And there are various ways of talking about this. Veblen talked about conspicuous consumption and keeping up with the Joneses, status seeking. And you could also view this through the lens of evolutionary fitness, signaling, I have Bitcoin, therefore we should have children together. That sort of evolutionary Darwinian signaling. If you think about it, there are 59 million adults in the world who are millionaires, so there's not enough Bitcoin for each millionaire to have even 3 Bitcoin. And now if you add into the mix all the billionaires, the corporations, the nation states, the other institutions and entities which would want to own Bitcoin, you see how there's really going to be tremendous demand versus the available supply. If the U.S. were smart from a geopolitical perspective, it would be focused, instead of people like Elizabeth Warren going after Bitcoin, it would be focused on accumulating more Bitcoin than either China or Russia. So this is who is going to want Bitcoin. Samson, the other piece of his response, there's a multiplier effect. I wanted to talk about this as well. We've talked about it a few times, but it's very important to remember you don't need $1 trillion to flow into Bitcoin in order to increase Bitcoin's market cap by $1 trillion. It's the last trading price, and hence that determines the market cap, because the market cap is just the last trading price times the number of coins. Last trading price is determined by the marginal buyer and seller and what price they choose to conduct their trade at. So imagine this simplified order book of sellers. You have one Bitcoin for sale at $50,000, and then the next Bitcoin that's for sale is much higher, because there's no one between 50,000 and 100,000 who wants to part with their Bitcoin. You have the really weak hands who are willing to sell it at 50,000, and then you have the stronger Bitcoiners. I think the number is actually much higher than this, but you have the stronger Bitcoiners who won't even sell a sat until Bitcoin hits 100,000. So in this case, once you take out the 50,000 level, the market cap of Bitcoin would double, and it would only require one person to buy one Bitcoin and pay $100,000 for it. In other words, it would only require $100,000 to double Bitcoin's market cap and move it from approximately $1 trillion to $2 trillion. So you're not needing an additional $1 trillion to come from some other source. Obviously, this is a gross simplification, this order book is, and higher prices will almost always draw out some new sellers. But Bitcoin hodlers are especially maniacal crowd, and you can expect many of us not to part with our Bitcoin ever, not to mention even at 100,000 or 500,000 or $1 million. In just the past few years, we've seen examples of short squeezes similar to this that had similar characteristics. So for example, if you remember GameStop and how it basically went from $7 or $8 a share up above $100 a share. And this was a short squeeze. This was a lot of institutions were short, and then they were forced by retail investors to cover their shorts. And another example would be when the Hunt brothers cornered silver briefly in the late 70s, early 80s. Silver spiked and then crashed back down again. But here's the difference, unlike GameStop shares or silver, and I should mention these are both examples of where you had basically a seller strike and you just had buyers coming in, and there wasn't enough supply available to cause the sellers to part with their silver or GameStop shares. But again, the difference, unlike GameStop shares or silver, Bitcoin has a fixed maximum supply, when GameStop's stock price soared, the company just issued more shares. When silver spiked, everyone in the late 70s, early 80s went out and sold their grandmother's silver, cutlery, and flatware, and the silver mines kicked into high gear everywhere, thus bringing a massive supply dump on the silver market. But this doesn't happen in Bitcoin. This cannot happen in Bitcoin because Bitcoin has an inelastic supply, as economists would say. So higher prices cannot increase the supply, which is fixed ultimately at 21 million coins, and these coins can only be dripped out every 10 minutes with each new block. So it's really, the supply is not dependent, or the issuance of new Bitcoin is not dependent on the price of Bitcoin, unlike silver and corn and GameStop shares, where higher prices incentivize more people to produce those and dump them on the market. Finally, wanted to end with a great tweet from Adam Back, also about the issuance of the Bitcoin, the approval of the spot Bitcoin ETFs in the US. Adam writes, "So TradFi let the Bitcoin apex predator into their China shop." This is the bull in the China shop metaphor. Doors open in hours. This was tweeted out just right before the ETFs opened yesterday. Supply squeeze, volatility, 24/7 trading, high leverage. Will the ETF market makers and approved participants, or whatever AP stand for, have enough liquidity, or will things get crazy? Everything hits spot in a supply squeeze. I want to repeat that. Everything hits spot Bitcoin in a supply squeeze. They're going to have to actually go out and buy real Bitcoin to back this and to match the demand for new shares of these ETFs. And spot is thin. This is what we were talking about when we looked at this order book here. This would be an example of a very thin order book where the seller, once you take out the $50,000 seller, it goes right up to $100,000. So these are all reasons why I don't think it's a super high probability, but certainly possible for Bitcoin to melt up very quickly in the next few days or weeks to 100,000 and even possibly beyond that. And so I thought this was definitely an interesting thought experiment. It really is a good reminder of how scarce Bitcoin is and how many people are going to need and want to put it on their balance sheets. If you enjoyed this video, be sure to hit that subscribe and like buttons. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks all for watching, and I'll see you in the next video.